Are you curious about the future of semiconductors and how they power everything from smartphones to electric vehicles? If you are looking for a smart ways to invest in the booming industry, you have come to the right place. In this video, we are diving into the SMH Semiconductor ETF, your one-stop shop for gaining exposure to some of the biggest tech names in the world. Stick around till the end because we will share how this ETF could supercharge your portfolio. So let's get started. Thank you again for joining me today. I am Pankaj. As always, everything shared in this video is for informational purposes only. VanEck Semiconductor ETF is an exchange traded fund that focuses on the semiconductor industry. Here is a high level snapshot for SMH. This fund was launched in year 2011 and managing a fund of almost $23 billion. The expense ratio is 0.35% and year to date return is almost 36%. Let's check the fund overview and what is objective of SMH. SMH seeks to replicate the performance of the MBIS US listed Semiconductor 25 index. This index tracks the overall performance of companies involved in the semiconductor industry, including manufacturing, design, and distribution. This means that every company in SMH is a major player, giving you direct exposure to the semiconductors market's top performers. Why SMH is important? Semiconductors have a huge strategic importance to the country. An SMH ETF has a major role to play, and there are few reasons for this. Semiconductors are essential for a wide range of industries, including technology, automotive, healthcare, defense, and consumer electronics. The exponential demand for AI, 5G, cloud computing, and electric vehicles is directly linked to the growth of semiconductor companies. Semiconductors act as a growth catalyst. Global shortages during the pandemic and increased government investments in semiconductors production, especially with the policies like US CHIPS Act, have accelerated growth in the sector, making it a hot investment theme. Further, due to AI and machine learning boom, semiconductors have become critical. The rise of AI companies like NVIDIA has triggered huge interest in semiconductors as AI applications require significant computing power and advanced chip technology. Let's check their holdings. SMH is composed of 26 companies, each heavily involved in semiconductors. The fund is passively managed and focuses entirely on this sector, making it a great option if you are seeking pure semiconductor exposure. Let's take a look at its top holdings. NVIDIA, which has a great run in 2023 and 2024, makes up 22% of the portfolio. You also have TSM, Broadcom, AMD, and others as part of this fund. With the top 10 holdings make up 75% of the entire fund. These 26 companies are major players in the global chip market and have a strong growth prospects tied to the advancements in AI, 5G, and autonomous vehicles. Let's check the geographical exposure. When we look at the geographical allocation, 77% of the companies are based in North America, with 14% in Asia, and the rest are in Europe. This global diversification ensures you are capturing the worldwide growth of the semiconductor industry. When we look at SMH fundamentals, SMH has an expense ratio of 0.35%, which is lower than most sector ETFs. It also pays a dividend with a dividend yield of 0.44%, which may seem very small, but given the growth potential of semiconductors, that is just an added bonus. Over the past 10 years, SMH has grown from $25 a share to almost $240 per share, showing the strong performance of this fund. However, as with any high growth sector, there can be volatility, as seen when it dropped from $281 to almost $236 in last few weeks itself. Why SMH is so unique and why should we pick up SMH? There are few strong reasons why SMH is so unique. It has a high concentration of industry leaders. SMH gives investors exposure to industry giants like NVIDIA, TSM, Broadcom, AMD, and others, which have outperformed the broader market due to their innovation and market dominance. It has a very high market liquidity. SMH is one of the most liquid ETFs focused on semiconductors, meaning that it has lower spreads and easy buying and selling. Almost 6 million shares are traded each day. It has a huge growth potential. Compared to broader tech ETFs, SMH focuses only on high growth area. Its companies are critical for the future of AI, computing, and smart technology, giving it an edge over broader tech ETFs that may dilute exposure across various industries. With 99% of its exposure focuses purely on semiconductor and semiconductor equipment, this is one of the most concentrated player in the sector. If you are serious about getting involved in this space, SMH is a highly targeted choice. Moreover, its long-term returns are impressive. It is giving almost 24% of annual return since last 10 years, and in the last 1 year, its return is almost 57%. SMH has consistently outperformed broader tech ETFs over the past 5 years due to the semiconductor sector's significant role in global technological advancements. 1 year return is almost 57%, 3 year return is 72%, and the 10-year return is 825%, which is massive. When we look at their competitors, SMH competes with other semiconductor ETFs like SOXX and XSD. While we talked about major qualities of SMH, for our comprehensive review, let's check the downside and potential risks. The semiconductor industry is highly cyclical, meaning it can experience significant downturns during market corrections or economic recessions. Further, semiconductor industry is tied to geopolitical risks. Semiconductor companies like TSM face geopolitical risks, especially with tensions between Taiwan and China. When we look at its beta value is 1.57. It means that it has more volatility compared to S&P 500 index. Let's talk about the future outlook. Its future outlook looks impressive, and there are few reasons why we say this. First, due to AI and 5G growth. AI and 5G are long-term growth drivers for the semiconductor industries. Companies in this fund are well positioned to capitalize on these trends, ensuring strong growth potential. Second, due to the boost in US manufacturing investment. The US government push to enhance domestic semiconductor production through initiatives like US CHIPS Act is said to benefit US based companies which are part of the SMH ETF. To conclude, SMH is offering focused exposure to the semiconductor industry, which is poised for continued growth driven by AI, 5G, and advancement in technology. SMH stands out for its concentration in industry leaders, relatively low cost, and historical performance. For long term investors looking to capitalize on the tech sector's future, SMH provides a balanced combination of risk and reward, potentially outperforming broader tech ETFs. That's all for today's video. If you like the analysis, please hit the like button and subscribe to the channel. Until next time, happy investing.